Hi and welcome to a weekly big picture, the outlook looking from the fundamental aspect, the sentiment and of course the technicals. So looking from that view, I'm going to start off looking at the US dollar first, because it's top of the list here. Don't know why, but probably because it's the most traded currency. So what's the overall view? What we got coming up this week? Key movers this week is the FOMC economic projections and the interest rate statement on the 20th. So some volatility to be expected around that date, and it may explain why we're seeing a bit more chop today, maybe tomorrow as well. We'll see. But for now, big numbers coming there on Wednesday evening. So where's the rest? What's the picture and what's the expected outcome of such meeting? There's a view that that Powell will continue to be, the Chair Powell will continue to be a bit dovish, and that in itself may help the US dollar stifle from where it's sitting at the moment. It's I'll come on to technicals at the moment, but may not help things. Hedge funds, they're already a bit bearish on the dollar, and but they're positively bearish in the fact that they already hold loads and loads of positive positions, but they're reducing their positions effectively. Asset fund managers are still bullish dollar, so the dollar on the whole still remains relatively strong, and it's not surprising when you look at its competition. Take the euro for example. The Eurozone is in the mire. I keep on saying this, it's not looking good, it's not helped by Brexit. Take Brexit out of the equation, it's still not good. German data has been poor. They've had to provide a new long-term loans system. Now that was going to be data dependent, that actually happened, so that's all so it's a bit delayed on tidying that data up there. But on the other side of it, we've got the EU summit coming up on the 21st. I don't know why I put EUR summit, but there we are, on the 21st. And then we've got some key data on Friday for the flash manufacturing and services data. Now this really will be watched carefully from traders, but that's coming Friday. But before that, we've got the summit. There will be plenty of other factors in there. What's the big money doing? Well, asset fund managers are reducing their longs. It's certainly to a trend to the downside, and hedge funds are getting more bearish on the euro. So overall, the euro from that perspective is weak. Technically, I'll show you in a moment, but it's looking pretty weak on a weekly basis. And okay, we've had a bit of a rally. Is it going to push up higher? Possibly. We could see a pop and drop here, but there's little reasons for the rally. Fundamentally, it's a technical rally, and it could at some stage roll over. I've put it on this crisscross pattern here purely on the fact is technically it hasn't really broken out of a range at the moment, so it's sitting in a range which probably is as bearish as anything else, but recently we've seen some good updates, so you can't ignore that, and there is potential for some stops to be taken out of above the current price levels. I wouldn't be shocked if we did see a pitch back up and break through where price levels are, but on the whole I've got to be bearish on this fundamentally. The pound, there seems little reasons to be cheerful, in the words of Ian Jury in the Blockheads. Anyway, there's very little reason to be cheerful, but well, Brexit dependent in terms of interest rates. We've got a meeting coming up on the 21st. But there's little to be cheerful about that. In terms of Brexit, it just continues not helping things along, because it's now moved from a more certainty to uncertainty. Asset managers, well, they're reducing their shorts a little bit here and getting a little bit more bullish on it. The hedge fund managers are not quite so sure. They've flattened out over the last few weeks, but they had been reducing their shorts as well. There was a sort of a trend up to where it is. So this may, I mean, the pound could be the outperformer. I say it quite a number of times. It's certainly outperforming the Eurozone at the moment in terms of the fundamentals. But technically, will it continue? Well, it's in an upward trend both weekly and daily at the moment. There is a lot of data coming out this week towards well, there's 19th onwards, but there's plenty of Brexit data and speech and things which could spoil things in the meantime, but possibly one of the most volatile for the week. Dollar yen, little in the way of volatility expected here. Okay, no increases, so inflation, interest rates not expected to be too much. In terms of sentiment on the yen itself, both bearish from asset managers and getting worse effectively, or they're getting more bearish as hedge managers, which ties in. This is inverted because remember this is the dollar yen. Technically, it ties in with the movement potentially on the longer time to the upside. No major data, bank holiday on the Thursday, so it could be a quiet week for the yen, which will not make too much of a change. Aussie dollar, now we've known before that Aussie dollar next change may be a reduction. We'll see more of that in tomorrow's minutes. Employment report on the 21st, and the Reserve Bank of Australia Assistant Governor speaking on the 20th. Actually, I think there's a couple of times he's speaking this week, maybe on the 19th as well. So need to be just wary of this, but fundamentally it's not having the greatest of times. Asset managers are tipping off there. They're bearish and getting more bearish as are hedge managers. Technically it's been really technically still down. I know we've had a few days up, but we'll look at the charts in a moment. Canadian dollar, more dovish tone taken from the central bankers. So no surprise to see asset managers continue to get more bearish there. Hedge funds, they're probably seeing a few green grass shoots, I don't know, but either way they're reducing their net short positions. In terms of key movers this week, we've got inflation and core retail sales both coming out on 22nd at the same time, so maybe a bit of volatility on the 22nd on Friday there. Okay, New Zealand dollar. Now there's a sort of soft approach to New Zealand dollar. It may also be next change to the downside. It's from its once bullish zone, it's sort of dropping back a little bit there potentially. Asset managers are dropping their positions, or getting a net more short, should I say, and the hedge funds, but they're just reducing theirs a little bit, so may see some green shoots. Technically, it's a bit of an in-between mess, to put it politely. And the S&Ps, I get asked about the S&Ps. What's the chances of it continuing up? Well, they're okay, so long as we've got low interest rates in the US. There may be some dodgy old numbers coming out. Whatever happens, even if the economic situation in the US drops somewhat, the money is not going to be going to bonds which are paying nothing. So it looks like that as long as that's happening, you see the asset managers, they're still buying, or I said still buying, they're rebuying into stocks, and the bearish hedge funds, even they're reducing their shorts there, so they're moving to the upside there. Technically bullish. So that's the picture from a fundamental right away across, looking at the sentiment, the big sentiment, main sentiment, as opposed to retail trader sentiment. That's where we're sitting on there. So let's just look quickly then through these. Looking at dollar index, this is quite key here, and we could see some weakening here, which would obviously affect some of the analysis, but fundamentally any weakening here, the fundamentals would take the charge in the end. So it's looking a bit soft at the moment and we've seen that over the last few days, and you can see quite a sell-off even coming off now. Not too sure why it's coming off quite as much now, but there you are, it's coming off there, the dollar index. But that may be talked down. There's an expectation for it to be talked down. If Powell is not dovish come Wednesday, we could see one hell of a push up on the US dollar. If he is, well, it's partially already in that price. Right. Sorry, let's have a look at the euro first and look at the weeklies here. So weeklies, really, you can see the trend there. Yes, it's had a good pitch up last week, and it looks like it may want to pitch up further, but the bigger picture here is still a downward trend. Looking at it from a daily point of view, I was wondering whether it'd pitch up a bit higher, run it into the 50 and 100 moving averages that are sitting there. It's air kissed them. It may still want to go out there and break those. There's retail traders are getting short at this moment. and I can imagine that there'll be quite a few. We could easily just break through that, have a zing through that, and then drop a pop and a drop. That may be aided later in the week on Wednesday, but from the Fed stuff, but or it may continue from that point of view. At some point, we'd like to see that weekly pivot taken out, which is below. We'll see, but we are at sort of a key point here for the euro for now. Technically, fundamentally, as I say, it is flawed, which always gives me the potential to get into a decent short. Pound dollar then. Pound dollar. What am I looking for here? Well, this has been, from a weekly perspective, it's pushed on. It's higher lows, higher highs. It's looking like it wants to carry on pitching potentially towards that 200. Maybe struggling in some respects, but we've turned positive technically there on a number of factors. Sorry, I've got it on average true range. Let's just look, just check, nothing there. Okay, so looking at the daily as well, it's struggling at the moment where it is, and this is no surprise really. I was looking, it looked a bit more bullish earlier on, but it's just not wanting to play ball. If you come down the time frames a little bit more, I will do on this particular case because it's quite key. Just coming down to the 60-minute point of view, and I was wondering whether we'd see at some point these highs taken out. We're sort of squashed in here between some technical support there at 32, around about 132, and resistance at 133. It's being pinched between that. The longer it goes on here, at some point it's going to fire, and it may be a good trade to be in if you're on the right side of it, of course. But it's got the potential. Technically, fundamentally, I still aside of Brexit, and Brexit's the big fly in the ointment really. It might spoil things somewhat, but if a deal can be done of some sorts, we could see the pound rally. Or if it can't, well, as I say, that could be the fly in the ointment and it will dive for a while. Dollar yen. So big picture here, I think there's a potential upside still. Fundamentally, it's a weakened economy. Slowdowns don't do the yen any good normally. We still haven't gone up to this weekly 200. I've been looking at this for a while. Could eventually get up towards that area, maybe more. Looking from a daily perspective, whilst a lot of the other pairings had made gains against the US dollar last week, the yen hasn't really. It's had a little turnaround on Friday there, but it struggled. So overall, it just shows you the weakness of the US dollar. The dollar yen. The only time it did quite well was when there was concerns around the market, and it still remains the go-to currency when there's a bit of panic. Okay, Aussie dollar. Technically then, still in a downward trend, but clearly a downward trend there. And from a daily point of view, well, it's arguably putting higher lows in there, but really when you look at the lower highs coming through here, lower lows, you can't get away from that weekly picture that's over there. It may at some point break this, as I said, if the dollar really does get a bit of a kick in this week for any reason. We could see that these pairings do quite well from it, but fundamentally it's still got potential downside. So that's the big picture there. The Canadian dollar, on the fundamental point of view, central banks taking a more softer note on things here because of the fundamentals haven't been as strong as they expected and wanted to increase interest rates, so it remains a little bit of a tough one. Technically still in this upper trend here, it's really pushing through. Last week, okay, we had a sell-off and it made some decent gains there, but consolidated again. Where it's going to go from here, well, again, this may be down to Wednesday's Fed data, but it technically high lows, high highs have gone through there. If it starts pitching above the 133.75 area, 134 area, we could be seeing further upside there. With oil, if oil, there's oil meetings during next week. If the OPEC agrees some sort of cuts in or more cuts in production, it could see the Canadian dollar benefit from that, so just need to be wary of that. Otherwise, as I said, it maybe bearish flag sitting here, which we'd expect on a stronger Canadian dollar against the US dollar, but it's a bit in the air there with the central bank's decisions and thoughts. So that really rounds it up. Apart from looking a quick look at the S&Ps, nearly forgot. We're just going to look at the futures, S&P minis, as that's what I was looking at the market for, and as you can see, it's been pushing up. That retracement on the weeklies came back just as a couple of weeks ago, just came as small as its weekly 8 and weekly 50, bounced off of that. Looking at the bigger picture, I think we could get dips and sell-offs and things on these markets, but I saw last week, I think it was Buffett himself saying, well, where else would you put your money? And I've been saying it for a while. Fund managers aren't going to be putting their money with 0% interest rates. They need to try and generate income and money, and so these assets seem to be the equities seem to be the area where they may be favouring for now, at least. That's it for me. Have a great one. Bye for now.